Okay. Where is my stream? Hold on. I don't have it together. Let's see. All right. Let me minimize some of these screens. Okay. Hey, you guys. Welcome back to another Freedom Friday. Today, we are going to be discussing the one of my favorite passive income streams, one of my favorite ways to make money passively. Let me keep it simple. There are many, but this one I think is going to be a popular favorite. It's already a fan favorite on my page. I've discussed it many times. And it is REITs, Real Estate Investment Trust. So before I jump in, I wanted to introduce myself. If you're new here, hi, my name is Jocelyn, and I'm the founder of Maximize Money. And my goal is ultimately to help you learn how to maximize the money and the income that you already have now without trading your time for it. So I teach you how to create passive income streams and help you to get started, because a lot of people feel like they don't know what they're doing, and a lot of this stuff isn't as complex as we think. So again, today we're going to talk about REITs, which are real estate investment trusts. But before I get started, I'm going to put in the chat my Ask Me Anything link. It's a personal finance session that I offer. So let me post that and maybe I can pin it. Yes. All right. So let's jump in because time is of the essence. So what are REITs? REITs are real estate investment trusts. That is, and it's short for REITs, but the long word obviously is real estate investment trust. And I want you to think of these as stocks. If you have stock in Zoom, if you have stock in Facebook, Apple, any of the main sort of platforms that are out there, they usually are on the stock market somewhere, and you can become a shareholder. Think of REITs and real estate investment trust. I'm going to use REITs for the rest of this session, and that stands for real estate investment trust. But think of those in the same way. So with REITs, the main difference is that you do not have to outright own a company. REITs, which are real estate investment trusts, are good because they are real property, and real property can be residential real estate, which are homes, duplexes, things like that. And they can also be commercial, such as office buildings, nail salons, malls, things like that, or mixed use, which can be those apartments that are on top of a high rise and on the bottom maybe a grocery store or a cleaning company, for example. So all of those qualify as a real property. And with REITs, you get to own a portion of those, the same way that you own a portion of Apple and Zoom and anything else that's on the stock market. It operates the same way, but the main difference is that it's actual real property, real estate, and not an actual company that goes through valuations and stuff like that. Now, I believe in owning both. Like, I don't do just REITs and I don't do just traditional stocks, company stocks. I do both because it gives me the diversification that I want. I want to have money placed in different things just in case something hits the fan. So that is one of the main differences. The other difference that I don't think a lot of people discuss is with REITs, 90% of the revenue that's earned from REITs are required to go to investors. I'm an investor. You will hopefully be an investor. And in order to become an investor, you don't have to go the traditional real estate process. So usually when you are looking to buy a home or an investment property, you have to have a down payment, closing costs, you have to get an inspection, appraisal. Like, it requires a lot of involvement. You have to share all of your financial statements. You may have to open an LLC if you want to do something investing wise. But with REITs, you don't. You can get started with as little as, I say, $100, but if you only have $10, you can do it. I don't recommend that because you won't see any true returns. I would say at least $100, and $100 on a recurring basis. So when it comes to REITs, you don't have to have the down payment, the closing costs, you don't have to go through the traditional process. You don't have to work with a buyer, a seller, none of that. It's you owning a small portion of this company, of this real property, the same way that you would own a small portion of Apple and Zoom and some of these other popular stocks that are out there. Again, the main difference is that 90% of that revenue is required to go to you. As an investor, it's required to come to me as an investor, which is not something that's common when it comes to other traditional stocks. Now, do you potentially get dividends? Yes, you do. And You get that with company stocks and with REITs. But again, you have a higher opportunity for returns with REITs. And when I look at what I have on the stock market with my ETFs and what I have with REITs, the returns are much higher because you can get returns in two ways. You can get it through dividends, which if you already are investing in stocks, you know what dividends are. Usually these are paid out quarterly and they're paid out by the company based on how the company performed from that quarter. But in addition to dividends, you can also gain appreciation. So the beauty about real estate and why I continue to invest in real estate is that usually land and homes appreciate in value over time. A home that you bought for $200,000 will likely not be $200,000 10 years from now. And that's because of appreciation. The land and the home being worth more, being valued at a higher cost than it was, again, 10 years ago. So that's the beauty of REITs. You get to take advantage of both the dividends, which is the cash flow that you can get directly in your bank account, and the appreciation of the homes that are likely to happen. It's rare for a home not to appreciate. Now, how quickly it appreciates depends on the market and what's happening in the world, but it's never went I shouldn't say never. It's not as often that a home value decreases. And if it does, it's usually for a short amount of time. It's usually going to rebound at some point. So that is how REITs differ. Like 90% of the revenue goes to investors. I'm an investor, you're an investor, and it's also not the traditional home buying process. You don't have to have a certain credit score. You don't have to save for a down payment, closing costs. You don't have to work with the realtor, none of that. So that's really the beauty of REITs. So what are some of the pros of REITs? I feel like I've discussed a lot of them already, but number one, it's a very much a hands-off approach. So as I said, this is a passive income strategy of mine, meaning I don't have to trade my time for it. The most time that I'm spending when it comes to managing my REITs portfolio is automating the investments, number one, and I do that with all of my other stocks. Number two is, logging in and getting my account set up. Like after that, I don't really have to have any involvement. I don't have to go out to the property. I don't have to hire inspectors. Like I don't have to do any work on the properties. Like I don't even have to choose these properties. The whole process is automated through the platform. And the platform that I use, my platform of choice, is Fundrise. And I'm going to tell you a lot more about why I like them. But yeah, it's a hands-off approach. It's passive, truly passive. So every quarter I'm collecting dividends from the investments that I have, and I'm collecting appreciation. So actually at this point, I'm collecting more appreciation than dividends because of the way that I set my account up. I don't need the cash flow as much as I needed it back when I first started investing in REITs because I have other ways that I'm making money, and I'd rather collect that appreciation, which means that when I sell these stocks, they'll likely be worth more than what I bought them for, which allows me to cash out with more money. It allows me to gain that ROI that I'm looking for. So that is one major pro, is that, well, two actually. So number one is it's passive. You don't have to go to the traditional home buying process. It's very much a hands-off approach. And then number two is that you get the advantage of both cash flow, which are those dividends, and appreciation, which is allowing you to let the stocks stay, reinvest your dividends, and when you sell them, being worth more than what you bought them for due to inflation and the values of the homes increasing that are in your portfolio. So those are the main two pros. And it allows you to dibble and dab in real estate, which is very important, especially if you are looking to really make some money and retire early or make work optional. Like every millionaire that I know, and I don't know any, but every millionaire that I study, they all have a form of real estate in their investments. And I'm sure a lot of them are doing REITs in addition to traditional properties that they're owning. But again, it's all about diversification. We want to have multiple streams of income. We want to have our money in different things just in case the market starts to act a fool. So what are some of the cons of REITs? I honestly can't think of any. I really can't. Like I would say, I don't think there's any cons. I really don't. I probably would say the only one that I can think of, which is not unique to REITs, is that if you earn a certain amount in those dividends, you are going to be taxed on them, just like you would with owning Apple and Google and any of these other ones that are actually paying out dividends. If you cash out on those dividends, you are required by law to pay. It's income tax, the same way you're taxed on your jobs and things like that. So there is a certain amount that you have to hit to get that. And so that's some research you'll have to do on your own. But so far, I haven't had to pay any on mine because usually, or I haven't had to pay any primarily because I've actually allowed the dividends to be reinvested. Like I said, I'm investing right now for appreciation, less for dividends. So as long as the money doesn't hit my account, I'm not necessarily taxed for it because I'm not collecting it as income. So that would probably be the major con. And then the other con that I can think of as it relates to Fundrise, which is the account that most of my REITs are held in, is that you don't really have the flexibility to choose, like, I want this property. I want to be in this neighborhood. Like, no, it's basically going to be automated for you. Your portfolios are going to be automated and created for you based on your goals, whether your goal is to collect cash flow ASAP, or your goal is to appreciate, or your goal is to sit in the middle like I do and get a little bit of both. You don't have the flexibility the way that you used to kind of pick and choose. So that may be something that is kind of annoying for someone, but for this to be a hands-off approach, you can't really be expecting too much because they're investing on your behalf. So they're going to do what's best for you based on their AI and all the other things that they're kind of utilizing to choose the best options for you. So that's another con. So again, the platform that I recommend, which I've spoke to a lot of already, is Fundrise. And Fundrise is basically a platform. It's a crowdfunding platform. So think of it as like Robinhood. You'll go on robinhood.com, you'll download the app, and you'll select stocks, ETFs, whatever you choose to invest in. And then you can log in and kind of see how things are performing. It's the same way. And the difference with Fundrise is that most of the REITs, all of the REITs that are on there are private REITs. So there's a difference between private REITs and public REITs. Public REITs are the REITs that are on the market. They can be I can't think of any because I've sold all of mine, but they can be Berkshire Hathaway. Like some of those major companies have REITs, which means that you're owning a small portion of an apartment, company, for example. But with private REITs, usually these are on a house by house basis. You're not going to be owning some major corporation or shares of a major corporation like Berkshire Hathaway, for example. You will be owning actual home. So 123 Main Street may be in your portfolio. 123 Main Street, which is an apartment complex with an office on the bottom, like you're owning these individual places. And those can be mixed use, again, with the high rises and a store on the bottom. It can be commercial buildings, which are malls. It can be single family residence, duplexes. All of this is going to be at the discretion of whatever your goals are, but they're on a case by case basis. These are private. So Fundrise is going out and they're buying this apartment building and they're managing it. It's not under some big corporate umbrella. Like this is something that they're managing. They're buying with your money, they're managing with your money. And then as they make money on these properties, they are, again, required to pay you as 90% of the revenues required to go to investors. So that is the main difference. And I think that's the reason why I'm seeing a lot of success with my REITs because they each have their own unique strategy. If we look at these bigger corporations, they're going to do what's best for the betterment of the company overall. But we know that the strategy for a mall and the strategy for a single family home are going to be completely different. And I think that's the beauty of Fundrise is that they create a unique strategy based on the property at hand. Each property is going to have to be approached differently. And if you manage it right and you have the right strategy, you'll see the return. So there's yet to be a quarter that I haven't seen any returns on my investment, whether that's appreciation or dividends. Did things get kind of low during the pandemic? Absolutely. But now, because people are now employed, inflation's at an all-time high, like the money is coming in. People always need places to live. So like that's the beauty of the private REITs, and that's the beauty of Fundrise. And of course, with Fundrise, you can spend as little as $10 to open your account. And again, I don't recommend that because you're not going to see any real returns with $10. Like when I opened my account, I invested $500 and I said, okay, we're going to see what happens. And all things worked out. And I've been an investor ever since. So I recommend to continue to build your portfolio. Start with $100 and continue to see that increase. Continue to add that over time because that's how you'll truly see what you are earning. So I have a balance right now of around $2,000. And so far, I've earned around $500 on that $2,000 because I've continued to adjust my portfolio and adjust my goals. And I mean, I've been investing since 2018, I want to say. So it's been a long time, but again, I now have more money that I started. I have more money now than what I started with in my Fundrise account. So highly recommend it. Super user friendly. Like they make it easier and easier for you. They provide emails and status updates on like how things are going. And for me, that's important because I want to know where I'm investing, how's it performing, and overall, like how are things going from a quarterly perspective and an annual perspective. And they provide so much information on that. So you'll never feel like you're in the dark. It is hands off, but you can be as hands on as you want to be. So that is my number one, not my number one. I said that. This is one of my many strategies for passive income that I love and I continue to invest with. And if you are eager to get started, or if you have more questions about Fundrise and REITs, or just creating your own passive income strategy, please use the link that I've included um, in the chat, as well as in the description of this video. I do offer one-on-one sessions where you can ask me anything. You can ask me about home buying. You can ask me about real estate, paying off debt, investing in REITs, high yield savings accounts, like whatever your challenges are or whatever your goals are, I'm happy to help you accomplish them. So that is linked again in those two places in the chat and then in the description. And I'm looking forward to talking with many more of you. Like I love hearing these questions that you have and the goals that you have and helping you actually reach them. So thank you so much for watching. This will be on my YouTube page. It is one of the many passive income strategies that I love and continue to swear by. And based on this one, I've, earned $500 from doing nothing, literally just investing my money every month. So thank you for watching, and I'll see you guys next Friday for the next Freedom Friday topic. If you have ideas on what you'd like me to discuss, leave those below in the comment section or in the chat, and I will make sure to prioritize them. So have a great weekend. Happy Juneteenth, everyone, and I'll see you next week.